I'm Andrew Smith, I'm Global Head of Property for Aberdeen Asset Management. Well, Aberdeen's a global asset management company. We cover the full range of asset classes. We're a pure asset manager. It means all we do is manage other people's money. The real estate part of that is just under 20 billion euros under management, mainly invested in Europe, but we do have a global multi-manager team investing in funds around the world as well. So of that 20 billion or so, 90% is invested either through separate accounts or through our own funds. We have a diversity of funds across Europe. Some are single country funds, some are single sector, some are diversified across sectors and countries. So it's a big team. It's about 300 investment professionals, 11 different offices for the direct property team, plus Singapore and Philadelphia for global multi-manager. There's been a big push, certainly in our business, towards really, I suppose, core to value-added assets. Investors are generally de-risking, but what they are doing, I think, is focusing back on the real estate fundamentals. So the idea that you need to use leverage in funds, I think that's certainly taken a hit through the crisis. That's been where a lot of the risks have really come from. So investors are just focusing back on the fundamentals. They're focusing on locations that they think will deliver value. And I think we've seen quite a polarisation in the market between particularly the global sovereign wealth funds that are targeting a narrow range of assets in a few very big centres, so London, Paris, some of the German centres, attracting a lot of global flows. But we're seeing more value in some of the regional locations. The fact we have a big team in the different offices means that we can invest like a local institutional investor across a whole range of different countries. And very often we think there's more value in the second tier towns and cities. And that's where we're looking at the moment. And we're in a fortunate position, I think, in the UK in particular, where most of our separate account mandates are increasing their exposure to real estate. I think there's a pattern across other markets as well, where investors feel reasonably comfortable with the asset class, but just being very targeted about how they deploy the money. I think it's all relative in this climate. I think it's been obviously a very tough market. A lot of locations have been battered both on the occupational side and a lack of investment appetite. But having said that, I think certainly some markets look more robust than others. So we've been doing a lot of work in the Nordic region. We have a big team there. We're looking to put together a new fund to exploit opportunities in markets that really haven't been hit so hard by the global financial meltdown. So certainly opportunities in that area. Some of the German markets also look reasonably resilient. I think London is a big international story. I think our concern is that unless you're a long-term investor looking at some of those key trophy assets, maybe that's a bit overpriced now. So we're starting to look at some of the more innovative sectors, some of the emerging property types, so student accommodation, healthcare, residential in some markets where it's an institutional asset class as well. So looking at the main commercial sectors as you'd expect, but also trying to be a bit more creative about solutions in some of the regional markets and some of the more niche segments as well. It's interesting because I think you've hit the nail on the head. Risk is really at the heart of the whole thing. So we look at both risk and return, but risk is the part that we can control. We can't control what the market's going to do. We can predict and we have views, and of course we target money accordingly, but it's really the risk management process. And so it's identifying an appropriate risk profile for each client, understanding what it is they want to achieve from their portfolio, and how important is it to protect against the downside. So I suppose there are a number of things you can do. One of the things is a shift towards a focus on income, growing an income stream or securing an income stream first and foremost, and then capital growth is really the icing on the cake, and how do you get the benefit of that. So I think we've been fortunate as a business. Our focus has been towards the lower end of the risk spectrum, so core through to value added rather than opportunistic, and then thinking about, if you do deploy debt, what's it there for? What's it actually achieving for the investors? And generally there's no value in applying debt just simply to buy a larger portfolio. All it does is increase the risk. So it has to be there as something you use on a very targeted basis to improve the performance prospects. So really our investment process is focused entirely on risk management against the objectives of the different funds that we operate. It's a unique environment. It just brings so many different types of professional together for a week, and very often people joke about the market shutting down at home. Everybody's in MIPIM, but we're here with a team of about 30 people this year, which is a pretty big commitment, and it's a combination of things. So we're looking at promoting funds that we're working on. I mentioned the Nordic fund. That's a new product for us. So we're looking for interest in that. We're here to transact. The UK team has about 850 million sterling to deploy for UK clients, so great opportunity to network with the brokers and look for those opportunities. We're selling assets from other funds that are in the mature phase of their life cycle, so the continental European transaction team are very focused on finding buyers for those assets, and of course there are a lot of investors here, not just European investors, people from further afield as well. So we're doing all of that. We also participate in some of the conference and seminar events as well, so that gives us an opportunity to network, to hear other views, and maybe to contribute some views of our own as well. We've seen, I think, probably more non-Europeans over the last few years starting to come to MIPIM. We are a global organisation. We have a global distribution platform, but again, just to be able to meet people here and to talk about that. Also, we're potentially looking beyond Europe for our own business as well. So contact with people from North America and from Asia is also very helpful for us. I think it's always important. You need to get to know people to understand what they do. I think you get a much better feel for their businesses and their capabilities and skills from face-to-face meetings than you do just trying to do things over the phone or by video conference. The fact that MIPIM can be a focal point that just brings people together, again, that saves a bit of jet fuel. We do travel a lot in the course of our business, but to have everybody here in one place, it can be very efficient for us.